Sustainability is not for the planet. I'm all, just to be clear, I'm all for impact. I'm for ESG. I'm for sustainability. I'm all for these things. But it's for us. It's not for the planet. I don't care of the planet. Planet is here for me, not me for the planet. We want the planet to be here for us, for our kids, and for all generations to come. And therefore, we have to manage it, the planet, the environment in a nice and sustainable and positive way. But again, this is not for Mother Earth. It's for us. Hello, Alex. Hello, everybody. My name is Amir Weitmann. I'm the managing partner, GP of Champel Capital, which is an Israeli venture capital fund. We have raised already 2 funds, over $50 million, raising our 3rd fund. And our 1st and 2nd funds had a significant part in FoodTech and AgriTech. We invested in in 6 companies in the space, 2 in FoodTech, 3 in AgriTech, and another one, which is it's industrial. It's mostly a product that's in the industrial sphere, but it's really helping packaging and doing improving the industrial processes in the food packaging industry, not only, but mostly in the food packaging industry. So it's also very linked to this. And so it's a pleasure for me to have a conversation with you, Alex, today.
Amazing. Well, I'll tell you, this conversation is going to be very exciting for me because, first of all, anyone who follows Amir's post on LinkedIn, he's extremely sharp. He speaks his mind. He's very vocal, which makes him somebody that that our podcast is going to get canceled for. So I'm excited to have this conversation and see where it takes us.
Great.
Amir, just tell us the companies you took positions on are very well known, at least some of them. Maybe you could just share with us who's in the portfolio for those who don't know.
Right. So in the food tech industry, we have 2 very prominent companies in our portfolio. One is Remilk, which also recently made a lot of waves because finally the product got to the market. It's really a cow-free milk, but it's real milk. It's, from a chemical or biological point of view, it just doesn't come from cows, which is amazing. And the product is great. I will afterwards in a minute. I have forgotten to do it, but maybe I'll take a bottle and I'll show it to your viewers. And it's great. I can see that my wife is here. She's going to bring me the bottle. Amazing. I don't even have to stand up.
Perfect.
See why you have wives. So here it is. Thank you.
Yep. Incredible. They have a transformative product that's in the shelves already in the market.
Right.
So that's Remilk.
That's Remilk. Then we have Aleph Farms, which is meatless meat. Again, concept is the same. It's a different technology, of course. But the idea is to have real milk. Meat just doesn't come from a cow that has been slaughtered. It's engineered meat, but it's real milk, as opposed to all the meat, companies such as Beyond Meat, which essentially were simply, grass. They were vegetable. They were vegetarian. They came from vegetables in one way or another, and they were reprocessed to look, sound, taste more or less like meat. More successful, less successful. But at the end of the day, the technology were not, there was no breakthrough there. It was essentially doing what people have been doing for decades, just a bit better, which is okay, but there's no great, great news there or something, amazing. So this is the reason why, by the way, why we didn't invest in all of these other pretend meat companies, but we did invest in farms called Aleph Farms. Is a real technological breakthrough. This is meat. Again, this is not some sort of a meat alternative. This is real meat, and that makes a whole lot of difference. Of course, the regulatory environment and the complexity of the product makes it more complicated to bring into the market, but we're confident that it will happen sooner rather than later, after also a good few years. And that's on the food tech.
And maybe we'll just double click on a few things there for our listeners. So, and I think this is going to be the really interesting conversation piece, which is what were the kind of assumptions that drove you to make those investments? And I think also it's very important to highlight the current fund that you guys are raising and deploying from is not taking AgriFood tech investments, right? Your thesis has evolved. I'm really curious about what was the thought process in those decisions then, and what has an investor, maybe if your perception of the market has evolved as well. So take us through that thought process.
Right. So, first of all, I don't think that our thesis has evolved. The market has evolved. Let's be precise. We believe in food tech and agri-tech fundamentally exactly the same as we did 5 years ago, 6 years ago. We believe that the change that we were talking about at the time is needed. But what has happened is that investors have found that it's taking longer than what you want. And especially because we live in a world where essentially capital is looking for the best opportunities, the best IRR, the best ROI, which is legitimate. It's normal. That's what it has to be. So when you have AI and all this stuff, which is making a tremendous buzz, everybody wants to go cybersecurity. Everybody goes there and tends to or defense and security, which is the next fund we're raising. So everybody goes to these fields, right? And there are also good reasons for that. But the point is, it's not that the rest of mankind and humanity and all the other industries are disappearing. If you ask me, I think that there probably was a bubble 6, 7 years ago. But the basic case, I think, was correct and is correct and will probably come back because the food processes, the ag processes need to be more robust, more agile, and they need to be better. And we need to feed a growing world. We have 8 billion people today. The world is going to carry on growing up to, we don't know exactly, 9.5 billion people probably in the next decades. And most of the people who still live, outside of the big cities are moving to the big cities. In Asia, people are changing their diets and they're adopting a more Western diet everywhere. By the way, it's interesting because people have got a lot to say about how the Western diet is bad and it has problems. But one thing you can see, for instance, is that the average height of Japanese and Chinese and Asians in general has grown up significantly over the past generation, when for generations before that it hadn't. And in all those places where they still haven't adopted the Western diet, then the height of the people is still low. People haven't grown. So what does it mean? So maybe again, people can be very negative about the Western diet, but eating actually proteins and meats and milk and all of this stuff is actually very healthy for you, contrary to what people say.
Huh.
So, which is also one of the other reasons why we never went for the pretend, plant-based meat, etc., because it's not really healthier than meat. It's a legend. It's a myth. Of course, if you do lab-grown meat like Aleph Farms, then you're actually eating meat, real meat, if you want. So the health. So actually, you're getting the positive sides of the meat, and most of the negative sides are actually taken out. So you get the best product. So we believe that eventually it will succeed. It may take time. It may be another company. You never know these things, But eventually we'll get there because this is the right thing to do, both in the dairy side and the meaty side. We profoundly believe in these technologies, and we hope there's going to be more companies, of course, not only our companies, but companies focusing on the real thing, on real products, real breakthrough technology, bring real meat, real dairy products without causing the animal harm and without having to farm the animals. We think the world is going to go there. And if we're going to have this conversation, say 20 years from now, I think the world will be very different. Now, 20 years seems a very long time. And it is a long time in the life of a human being and certainly in life of the investments, but it's very, very short in historical term.
Yeah.
And even in the life of a human being who now typically is going to live 80, 90 years, okay, it's a significant chunk, but it's not even, it's maybe less than a quarter. So
So
what I'm saying is that the world is going there. I think the go to the market and the amazing reception that Remilk got in Israel commercially is a good example of this. And we believe that I'd say 15 years from now, certainly in the Western world, dairy products with milk coming from cows, uh, 15, 20 years from now is going to be mostly a niche product. I think that eventually, and it's not going to take, 100 years. This is over 10, 20 years from now. Aggressively, we believe that the entire dairy market will be replaced by products like Remilk. I think in the meat side, it's more complicated. It's not going to happen to the same extent, but it will happen to a certain extent as well. And again, it's going to take some time, but that's fine. That's
so
life.
so for our listeners, I just want to break down what I'm hearing, which is number one is Amir's a VC. They're looking at step change technology. So, you could do maybe a more sophisticated form of extrusion, right? Or, this technology has been around for 20, 30, 40 years. Or you want to do a step change, which is cell culture, or it's for a form of fermentation. These are same same taste, same experience, right? But produced in a very radically different way. So that's one thing that I'm hearing. Number two is you definitely see that the trends towards population growth, towards adopting a more protein rich diet are only going to increase. And therefore, feeding that, like from a thesis standpoint, just makes sense. You should have novel solutions that are just better from an ethical, but also from a unit economic standpoint, right? Just it's a given it's going to get
The,
there.
the, the ethics is important. I could give you the whole theology of this. I mean, it's very interesting stuff. Rabbi Cook, wrote a book about it, 100 years ago? In English, how would you translate it? The vision for veganism and peace. So it's a beautiful idea, and we believe in it. But I think that the way to reach there is through technology, and I think this is what we've been doing. By the way, this was one of the ideas that we had when we invested, because we see, if you want, where the world is going, both ethically, morally, and economically. But at the end of the day, if it doesn't make economic sense, it's not going to happen at all. So you
Yeah.
need it to make economic sense, because people want the moral premium that people are willing to pay is very low, if
Yeah.
at all.
Yeah.
And at the beginning, it's not only a premium, it's the opposite. People are kind of scared. To be able to make people change, you need to give them an economic advantage. It means that price parity is not enough. You need to be cheaper. And then once you're cheap enough, then the shift will happen pretty fast.
Yeah. So the question I have uh, is, obviously you are an investor. Usually, as a VC fund, you typically hold cash. It's about 10-year, maybe to 10 plus two, right? So there's a certain time point, especially if you go into Series A or seed. There's maybe even a short timeline. So can you guide us through some of the assumptions that were made by the investors that came in 2021, 2020 about timelines? And was a timeline, what, if you look back at it now, what would you have told yourself about timelines? Like learning what you learn now. And again, VC is about taking risk, right? It's about step change technologies. Like I think those individuals actually are the definition of VC rather than private equity, which is private equity is a very different role than a VC, right? But knowing now the timelines, what was maybe missed, or what was some of the assumptions that were formed, and how does that impact you today as an investor?
Well, I think people didn't realize how difficult and how long it takes, how difficult it is and how long it will take, especially in ag. People thought that because the market hasn't progressed, that there's a huge market which is going to advance and digitalize. And it's going to happen, but it's just taking much, much longer than expected for it to happen. Second.
Oh, no, don't worry. We have a team that edits afterwards. Don't worry. We have a team that edits afterwards.
Okay, I'm sorry. There's,
No,
there's
don't.
noise. Okay, there's no noise now. So let me come back. What was the question?
Yeah, so you go back. What was missed? Or what assumptions
Well,
did?
what was missed? So what was missed is that people thought that the changes were going to happen faster. Now, I still believe that everything that we thought at the time was correct. I don't think we have been proven wrong. I think that what we missed is that in that respect is the timeline there, because agriculture is a very conservative market. It's difficult to digitalize it. At the end of the day, the end client are farmers, and it's not always easy to convince them to make changes. It's not an easy market, if you want, but at the end of the day, nobody can avoid forever change. It is not possible. So, and again, 10 years in historical terms is the blink of an eye. But of course, another 5 or 10 years difference in terms of investment is all the difference. So I think that's what happened. And that's why money has fled the market. The investments have not disappeared, but they have collapsed completely. They are now, let's say, 15% of what they were, I don't know, 2020, 2021, maybe 2022, something like that. So, and of course, because there's much less money chasing the deals, so you have fewer deals, and it's much more difficult to get these funded. But again, I think the best companies will make it, and I think we will see a lot of companies which are still going to make it.
Yeah.
It's going to be much fewer than maybe we anticipated, but I think some of the best companies with the best products are still going to make it, and I think it will still be possible to create value, although from our perspective, not as much as maybe we would have wanted to, and not as fast. But it doesn't mean it's going to disappear. I think I would say that investors need to be much more disciplined in terms of pricing, mostly, and in terms of having capacity to keep the company afloat, because time to break even, I would say, is long. The growth rates are not always what you want them to be. And still, I think, we've got companies and we can see it's advancing. It's not that, everything went bust. No, I think especially I can think about, in the ag space, can think about one company of ours which is doing fairly well, actually. Not as fast and not as big as we wanted it to be 4 years ago, but it's advancing nicely, and we can see there are perspectives. And I believe that in the next 5 years, by the end of our timeline for all that we had 4 years ago, say 5, 6 years, I think that we're probably going to do actually not bad at all, because we were right in terms of the technology, because we were right in terms of the need. I think that eventually we will be doing okay. Again, it's maybe not going to be a huge success like we wanted it to be, but on the other hand, because specifically the company I'm thinking about is managed very well, very conservatively, so we haven't been diluted. We have, you know what I mean? So it's being managed properly, and therefore we kind of believe that we're going to actually be giving a reasonable amount of excess. The returns are going to be okay.
And I'm going to translate it that when we talk about the industry is kind of slower to change, what I'm maybe adding as my kind of peruche, my explanation, and a little additional word here is that it's very hard to get later stage deals done, meaning like because the technology, at least with things may have changed, evolved, but with like a step change technology like Remilk or an Aleph Farms, those require, at least initially, they required some very significant investments from a capex standpoint. You're developing quite a novel infrastructure there, and that requires appetite, right? It's almost like AI requires data centers, and
Yes.
nobody is like, oh, I can't believe like we shouldn't build any data centers. No, I think everybody understands that if you want to scale technology to where it needs to be, there needs to be infrastructure play, even for software. What's the most effective infrastructure? Is it in space? Is it in water? Is it on land? Okay. But nobody's doubting there's a CapEx investment that needs to happen for that, right? So technology, the difference here is, and actually I'd love to get your take is, why is there such a demand and openness to capex for, let's say, data centers? And there's so much pushback against putting out of the infrastructure that's necessary for, let's say, that's fundamental tech step shift in food.
Well, it's a question of belief. People believe that the question is you need to be able to show the money, right, to the investor. So people say, okay, you're going to build this whole food company, but how much am I going to be able actually to sell? And what's going to be my gross margin and my net margin? How much money is it going to, what's the ROI at the end of the day? And how long is it going to take? So whereas people believe that in the data centers, the ROI is going to be massive and relatively fast, short time, people believe that the ROI on food is going to be much longer. It's going to take much longer, and it's going to be less significant. And therefore, the money is going where people invest. It's very tautological what I just said now. Now, the question that you should ask is, why is it the case that people believe that the ROI on food is going to be low? And it's because a lot of these products have not proven themselves. Again, look at the example that that kind of killed the market for the alternative meat is, of course, Beyond Meat. Beyond Meat went to I don't remember which crazy capitalization on the stock market. Like the market cap was what?
15.
I don't remember how much.
15?
$15 billion, something like that. What is it now? 100 million maybe or something. It's virtually bankrupt, right? So it lost, I don't know, 99% of its market cap from the top. It's dead, right? So why? Because the unit economics is negative essentially. And the more you sell, then the more money you lose, and it doesn't seem to be going the right direction. Or at least it didn't for a long time. And the whole thing is saying, okay, fine. Well, why do we need what do we need this thing for? People are not willing to pay. The end client, the end customer, at the end of the day, is not willing to pay enough to make this a valuable product. So there's no value. As investors should not be subsidizing the consumers, right? We should be just giving the investment, which helps getting the product to the stage that it is actually going to provide value to the consumer, which is not the case. And therefore, boom. And because the whole hype was around mostly Beyond Meat and a few other competitors, they haven't proven themselves. There's quite relatively few sales, and even that at, either negative unit economics or nothing interesting in any case. So people wrote off the whole industry because that's how it goes, right? You have to remember that investors tend to be stupid. In other words, it's like a herd. Either everybody goes to the same stuff or nobody goes. That's herd mentality. That's how human beings function.
Yeah.
So the capacity to make the distinction between, as I said, something where we didn't go there to start with, because we saw this happening already in 2020. Even before that, I looked at it and I said, it's like Tivol 2.0. What, what's
Yeah.
Tivol?
Sure. Yep.
Israeli viewers for sure know what's Tivol. Tivol is a plant-based product that used to already exist in 1980s, essentially giving some sort of a, how do you call it, schnitzel or whatever it is.
Yeah, it's like a meat alternative. That's what it is, right?
Yeah, but you had it in 1980s. So what's the difference between Tivol and whatever and the Beyond Meats of today? Nothing really. It's a bit better today, of course, but it's not.
And I
People
think
don't
that
like that.
so
So this we saw live, and therefore we never made the mistake of investing in these companies. And if you look the companies where we invested, these are not these companies. They are technological breakthrough companies where we have a completely different project. So we believe that the sort of companies, these are real deep tech companies, right? Remilk, Aleph Farms, and others in the ag company, Clarifresh, Stretoscope, Sedex. These are very, very different in terms of the depths of the technology and the change that they're bringing to market. It's very different, very, very different. And this was our thesis, right? So we understand that when you have a breakthrough technology, adoption rate may be slower. There are significant risks, which you don't have so much when you have a copycat product, because you know that the market is there already. But that's our thesis. And our thesis is going to be proven by whether we can have at least one of these investments doing very, very well, giving outsized returns. But we believe that having these sort of technologies, which are very, very, very much off the chart, at the end of the day, if you pick up one of the right ones, then the entire fund really is going to be a success.
yeah, and just go back to infrastructure play. The way I hear it is data center supports software margins,
Mm-hmm.
and a fermentation plant supports ag and
Oh, of
CP.
course. Yes, but yes, still, it's true. But it's true and not true. Let's put it this way. Yes, if you put it the way you put it, then yes, it's true. First of all, the infrastructure investments in the data centers are very, very heavy, and they are continuous, because it's not only the brick and mortar, it's afterwards the energy costs. So you can't just dismiss these costs, which are ongoing costs, not only one-off. It's ongoing costs as if they don't exist. They are significant. So yes, it's software, but it's software based on a lot of energy. And in a world where the energy is relatively expensive, it's a huge issue.
Yeah,
So
yeah.
you can't just dismiss it out of hand. This is not, some sort of an app, first of
But it
all.
goes back to it's the belief is there, while the belief on the food ag side still hasn't been proven out.
Right, exactly. But exactly. But that doesn't mean, but for instance, on the foods part, right? So, part of what we want to do, for instance, is a B2B project where we don't, I mean, we want to have for Remilk, at the end of the day, we want to have two parts of the company. We want to have one part which is going to be this,
Yep, direct consumer.
and where yes, there are more costs, where let's say in this bit, in this case, it's in partnership with GAD. So in any case, a lot of the costs are borne by the partner, who, in terms of the investments, they know how to do this sort of stuff. But another part of the of business eventually is to have a B2B protein based business, where you only sell the protein to
Yeah,
the lactose protein to the client. This is just for you to understand. This business is like well over 100 billion, I don't know, 150 billion market a year or something crazy like that. So, if you capture just a very small fraction of the market, and it's a relatively high margin market, and you don't have to do, and it's a B2B market. And yes, so yes, it's not software, but it's not, if you want, as tough as it sounds. So I'm not saying there are no challenges. There are plenty of challenges, and it could fail, but the vision is there. And I think, I personally think we're going to have a great success eventually.
And what can you guys give our listeners just a little venture math for a second? So we get a sense of what's a great success for a fund, right? Because I think a lot of our listeners are trying to just understand, okay, what kind of return should I be projecting? And also when I'm looking at how much dilution I can afford to give that return, where I need to get this. So when you're going with a thesis to when raising a fund, what's a typical return that you're expecting to be given in a
So
VC?
in the entire fund, on the entire fund over the whole life of the fund, we are targeting a 5x return.
And what would that look like on an annual basis? So if you would take the 5x on the fund, what would that just look like from a sense? If I just put it into an S&P
I
500,
don't know, 30%.
around 25,
Well, it
30%.
depends on the size of the how long is going to be the fund. It can be anywhere between 25 and 35%
Yeah. And now
annual
that takes
return.
me into the next question, which is something that again caught my eye and why I reached out initially, is that you wrote this great post about like the fundraising process, and I tell founders like we should have a lot of grace for VCs. You know, you talk shit a lot to about VCs as founders. You know, it's like, oh, this guy, he never got back to me. I sent him 5 emails and due diligence, he disappeared. But on the other hand, you guys are founders yourselves, right? You have a startup yourself, right? We have a startup, you have a startup. I speak with founders raising every day, and they're all telling me the same thing. It's harder than ever to find investors who are actually deploying, and getting access to those leads takes time founders just don't have. Every month fundraising is a month burning runway. This is why we created FTW Plus, a community of founders actively fundraising, the world's most accurate AgriFood investor database, plus connecting you directly to ideal target investors and a community of support and accountability. Guaranteed results or your money back. Apply today at www.joinftw.com/hub.
100%. This is a complete startup. We are founders and we are having every day. So we find it very difficult. It's a never ending race to raise more capital, and help our companies raise capital. And then our fund needs to raise capital. I mean, it's a never ending chase after money. It's not easy. But on the other hand, when you have successes, it's great. It's really, you're happy. And then it's even better when you actually can return a lot of money to your investors. That's great.
Yeah, and
The feeling that you have beyond what you make yourself, which is great as well, of course. But the feeling of somebody trusted you with his money, and then this trust was proven to be justified. That's an amazing feeling.
what makes it so amazing?
It's a feeling of accomplishment. It's a feeling that you did the right thing, and that then your client, your LP, did the right thing. Your partner did the thing. It's a question of trust. At the end of the day, you don't. I mean, at the end of the day, of course, you cannot promise anything to your clients. It's venture capital. It's a dangerous stuff, right? You can, and occasionally you lose money, including 100% of the capital. So people who invest in this business must understand that this is a very, very, very dangerous business, right? But when you succeed and your partners are happy because they made money, that is great.
Well, I'm gonna start asking questions. Probably can't guarantee we're gonna get any answers, but I want to like peel back the curtain a little bit, right? Which is, what does a fundraising process look like for you? Like, take us through it. Like, you just right now in the middle of raising a new fund, right? You have two funds that you've deployed, 50 million under management. You're going out and raising a third fund. It has a new thesis, which maybe touch about the thesis, but more about what does a preparation look like? And I think fundamentally, question I'm trying to understand is, how do you raise a new fund when you still haven't exited the funds you've already deployed? How
Well, first of all,
does that work?
yeah. So first of all, answer your question very clearly, honestly, and bluntly, it is very difficult because the problem of this business is that it takes a long time. It really does take a long time. It's not something that takes couple of years. Most of the time you're going to have, it's really a 10-year horizon, and therefore you need to have a great success in the middle. So we did well on our first fund, which allowed us to raise our second fund. The second fund is relatively new still. We have a couple of companies doing very well, but we still haven't had a huge success, although we're probably on the way there, but it will take another couple of years because that's the nature of things. And therefore now it's not easy to raise capital now, 100%.
But
How do we do about it? Yeah,
exactly.
we have our list of people we know, or people we are targeting. The people we know, of course, we reach out. The people whom we are targeting, we're trying to get a warm intro because it's always easier. And sometimes you can't, so you just kind of can't cold call them or cold email them or whatever it is. But and then you make your pitch, and you try to convince people that they have you have value for them. So far we're quite, not that's extremely successful. There are people who've been raising, billions or hundreds of millions. We're not there yet, but yeah, we are reasonably successful because I think that we have a really good value proposition. So this is not just, I don't want to, I know your viewers are mostly in the ag and food space, so I don't want to mix with other topics, but very briefly. So our next fund is going to be about defense and security. Why? Because we see where the world is, and we see where the money is going to. Coming out of Israel, of course, we have a comparative advantage in investing in these fields for tragic reasons, because it's unfortunate, because Israel has been at war pretty much always, especially over the past 2.5 years since 7th of October, but because not only Israel has been at war, but because the whole world now is rearming and is, after the invasion of Ukraine by Russia over 4 years ago now, the overtone window has been moving. People have changed, right? If 5 years ago, or less than 4, until 2022, investing in defense and security, it's not ESG, it's really bad, it's immoral and blah, blah, blah. Then people realized actually defending yourself against bad guys is not at all not ESG. It's not immoral. It's to the contrary. It's very ESG. It's very moral, and it's a necessity, because if you don't do that, you die, and there's no ESG if you're dead, right? So,
I'll let Amir, again, without disclosing too much, I'll say when I in the AgriFood world is a very strong component of sustainability and ESG. And my position has always been, again, I'm maybe quite vocal about this, that the planet will be fine. Don't worry. One way or another, the planet will be okay. It's us humans. Like The Rock doesn't have a feeling towards
yeah, exactly. The whole
change,
thing,
right?
sustainability is not
We are
for
going
the
to be the
planet.
trouble, right?
I'm all, just to be clear, I'm all for impact. I'm for ESG. I'm for sustainability. I'm all for these things. But it's for us. It's not for the planet. I don't care
Yeah.
of the planet. Planet is here for me, not me for the planet. See
Yeah.
what I mean?
I kicked out from a few conferences that
I
belief
don't
system.
care about these nutty jobs. That's the reality, right? The reality is that, and the reality is they agree with me. They just don't want to admit it to themselves. But who cares about the park? The park, I want to have a nice park and a nice environment. I want the earth to be clean and tidy and neat. And I want everything to be sustainable and beautiful. And I don't want the world to become dirty and polluted. Or I want I don't want these things. But it's for me, because I want to have a good life. I don't care about the earth per itself. I'm not some sort of a pagan a worshiper of
Pagan, yeah.
ancient times or modern times, by the way, who kind of worships to Mother Earth. I don't care about Mother Earth. Mother Earth is for me, for us as human beings, to make our lives better. And because our lives is better when we live in a good environment, in a clean environment, in a non-polluted environment, and when the resources of the planet are managed in a sustainable way, so that not only us, but our kids and our grandchildren and all generation coming after us can enjoy from the planet that we are enjoying from. We don't want to be selfish and say, Louis XIV, the French king said, "Après moi le déluge," right? After me, the how do you say that in English? After me, the Amabul, the deluge. Right, the world can collapse. That's not how we function, right?
Not the thought process. Either one of us. You have family. I have kids. That's not the way.
Exactly. We have kids. We want the planet to be here for us, for our kids, and for all generations to come. And therefore, we have to manage it. The planet, the environment, in a nice and sustainable and positive way. That's the outlook we want to bring. But again, this is not for Mother Earth. It's for us.
Yeah, 100%. And taking us to the fundraise that you're going through right now, which is can you give us insight? How do high net worth individuals think? Because I feel like there's individuals, you've interacted with those individuals for, in your professional life for decades, right? You've been in high net worth management. You understand the thought process, right? And for many founders, they're either coming from a technical standpoint, a commercial standpoint, they don't come from that world. They don't interact with that world, right? Like any insights into what drives people like that? Like, and how do you use that drive for as encourage LPs. Like for example, I know that your fund is extremely Zionistic in nature. It also has a position in invest
Well, it's
geographic.
not true. I have to say I'm very Zionistic in nature. This is not true of our fund. Our fund is not Zionistic. We don't do politics. This is business, right? So what we want to do is we have one mandate is to give back money, as much money as possible, as fast as possible to our investors. Okay? Let's say as much as possible. Fast, whatever, yes or no, depending on the circumstances. But we have to give back as much money as possible to our investors. And of course, yes, we're not going to cheat, lie, deceive, all these things. Yeah, but we don't want to do them. But our mandate is we have to be we have to be honest, and we have to be faithful to what our is, which is to make as much money as possible. Now if I fail, I fail, but that's what we want to do, you know what I mean? So and I don't want, and I'm not going to mix ideology, I'm not going to mix ideas, including Zionism or Judaism, all these things which are tremendously believed in, but it is irrelevant. So why do we invest in Israel? It's not at all because of Zionism. We invest in Israel because, first of all, our team is in Israel, and because we believe in the Israeli ecosystem, because it has proven itself to be worth it. Israel is the number one destination of VC money per capita in the world, more than the States. It is also, in terms of that's money in and money out, it is the number one country in the world of unicorns per capita. And this is not Zionism. This is not ideology. This is pure statistics. This is how it goes. So if you count money going in as opposed to money going out, this is the place, Israel, to put your money in. And not because you are Jewish, not because you are Zionistic, not because of anything else, then you want to make money. That's where it ends. That's where it starts, and that's where it ends. And yes, on top of it, investing in Israel is good for the country. It's good for whatever, but that's fine. But that's on top of it, right? It's not why we're investing.
And would you say that's so? I think that gives us insights. Would you say the LPs that you're talking to, the main motivation is, look, we think this is the best pathway for you to get returns in your investment, right? The fundamental drive is not going to be philanthropic or investing in Israel because of a religious affiliation or ethical affiliation. It's that there is a case for why this is just great economics, right? And that's why you lead with who your LPs.
Yeah, of course. If you're Jewish, it's easier because people have got a sentimental link, to Israel. If you're Zionistic, all kind of non-Jewish Zionists, fine, it's great. But at the end of the day, you have to prove to your LPs that their money is not going to be charity money, because charity money, they don't need me, right? This is going to be good investment, investing in companies where we believe we are going to make money. Sometimes we're right and sometimes we're wrong. And overall, I hope we're going to be right enough of the time, and that it's going to be worth it for our LPs. And we believe we're on the way to do that.
Yeah. So I want to ask a kind of very not personal question, but how you deal with this, because I know I struggle with this, and I've recently spoken with an individual that was a very high up executive in a company. He started. He did well, fine, but he was in his 50s, and he's starting a startup, and he's looking for venture capital. And I said, look, I'm just curious, why don't you just, call 3 or 4 of your friends? You have a track record, just go and ask them for the cash, right? There's not a lot of money. $1 million should not be so hard for you, right? People say, like, well, I'm really uncomfortable because I might lose the money, right? Asking people for money that I might lose makes me feel really uncomfortable asking for people. Actually,
It should not be in the business of raising capital.
yeah. So take me through that. Like, how do you feel comfortable asking for
I
money
feel very
if
comfortable
you're going to lose it?
telling my LPs, listen, guys, this is venture capital money. You may lose all of it, 100% of it. I don't think it's certainly not in a fund. In a single investment, it's possible. In a fund, it's unlikely, but it's not impossible, right? And I'm telling them, so if you have, all your net worth is, say, $1 million, then please do not invest with me $500,000, right? Unless you're making $1 million a year and whatever. But you need to have some sort of logic, right? But yeah, if you're a high net worth individual, if you're talking to family offices, these guys, are managing hundreds of millions, billions, tens of billions. Okay, so they're allocating a certain part of the entire amount that they're managing to us, whether it's 1 million, 5 million, 10 million, 50, whatever it is. And it's okay. We have one client who invested a lot of money with us, and the guy is a billionaire, and he's okay. You know what I mean? He's very okay with that. So he knows there's risks, but he's okay with it because first of all, he can afford it. And even if it goes to south, say, okay, it's not going to make a difference to his life. And he believes in the thesis. So, he trusts us and that's great. And that's what, so everyone at his level, people can allocate some of their net worth. People who've got money and who are making money should allocate some of what they're doing to I would say higher risk asset classes. I'm not saying 50% of the money that they're having, but if you have $10 million, why can't you dedicate, say, $1 million to higher risk? And especially if you are not only have a net worth, but also making money. Say you save every year, I don't know, a few $100,000 or more. But what's wrong to invest $1 million over a period of a few years? Because, we don't call all the money on day one, right? So over a period of a few years to invest a few $100,000, $1 million in higher risk class doesn't have to be with us, but I'm saying in general, it makes sense. And also, people want to do something where there's a purpose, when they're not only, purely their financial returns, but they want to, in one way, the excitement, be part of a story. If you're talking about food tech and agri-tech, people believe that this can change the world, right? Make the world more sustainable, more efficient. And if you make money with it, about it, it's great. But then it's not only that you're making money with the purpose. So it's even better, right? So this talks to people, and you have to sell a story that people are going to identify with. So, for instance, a few years ago, a lot of people identified with food tech and agri-tech. It's much more difficult now, but it's still possible. And people who believe in this story, well, it's going to be easier for them to, that's it.
Do you have a fear of not giving people their money back and
Of
looking
course, I have a fear.
like not just the same of the high of giving people money back and showing the success? How do you deal with that fear of, my gosh, I'm not going to give back? I just took $50 million from people, which is not a small amount. Now, are you dealing with the fear because you say, like, that's, look, they'll be okay. I mean, like, they took a risk, then they knew took a risk. I know I have a thesis I believe in, that I'm working hard for them. But is there still a fear in your heart? And how do you overcome that fear
100%.
to
I'm
pass
terrorized.
cash?
100%. I'm terrorized. I'm not going to give back the money. You don't realize how fearful I am. I'm very fearful, which forces me, by the way, you should be. Anybody taking money from other people, also for your money, but certainly from other people, should be extremely fearful of not giving the money back. That's our responsibility to do the best we can to do it. Because if we don't do it, then at least you have to be able to look at yourself in a mirror and say, I've done my best. My conscience is clear that I did not waste my LP's money. It's very, very fearful. It's very scary because if you miss, it's people's money. It's important for them. It's their lives. It's their savings. You have to be mindful of the fact that they give you in trust capital. It's very, very important. So we're doing our best. I'm not going to say we never make mistakes. Of course we do. Of course, we make mistakes, right? But we're doing our best to be honest and to do and to be worthy of the trust that has been given to us.
And the last thing, by the way, this is really helpful for me because I ask for money all the time, right? But I feel like it's a little easier for me because at this stage, I'm not the CEO of the company, right? That I work for. So it's like, all the time I'm asking for support, and I believe that it's a fair investment. It's the right risk for people to take. But I think the job that you have is extremely stressful, right? So the question I'm curious about is, a lot of the individuals are giving you investments become also personal relationships as well. Give
Yes.
me guidelines on that because I've seen that happen as well. You spend time together, you go to dinner, you fly to ski together, you go to experience together, you get to know their family, right? It's a very personal thing because that builds trust. How do you navigate that personal relationship and the fact that they wrote you a check and you owe them money back?
You don't owe them money back. You don't owe anything, right? It's
It's
an
not debt,
investment.
right?
So that's not the right word. But yes, with a lot of your clients, you become friends. You spend time together, you speak together, they trust you, you talk to them, you talk to you. Yes, you become friends.
Do you have like a red line that you worry about crossing or any guidance
In
on
what
like,
way? What do you mean? In which field?
I don't know. That's a question I'm asking, is maybe that's kind of the discomfort of like friends, and at the same time, they're the ones that are financing your.
My red line is not to lie, is not to be in a breach of trust. In other words, my duty, I don't make decisions instead of my clients. I don't. I'm trying to be as honest as I can uh, with what's the real situation of the fund of the companies. as transparent, as honest. And at the end of the day, I'm trying to be not too pushy. I'm telling them, we believe this is a good opportunity and we would like you to invest together with us, in this opportunity. And of course, my interest is for my LPs to invest as much money as is possible. But I'm not going to lie to them and tell them, a version of the reality which is not truthful, because it would be in my interest to kind of embellish it. I don't like to do that, and I feel it's a breach of trust, so I don't do that.
Yeah.
And it's not good. Maybe it's not the best strategy in terms of sales, but I feel better with myself. So I'm trying to stick to the truth as much as I can, and be in a situation where I'm not in a breach of trust, and I tell reality as it is. Tell my LPs how I see things, and if they identify with the way I and we as a team see truth, then they invest with us. If not, no, that's it.
Amir, you've been extremely generous and truthworthy with us. How can our listeners give back to you if they're listening now? Is there something that you can ask from them that you're looking for
Money,
short time?
send us money. Join our next fund, join our existing SPVs. And with the most money possible, we believe that we have a few very great opportunities. If you want to listen about them, then you're welcome to reach out to me through LinkedIn, send me a message. I'm sure they can send you a message and you will forward, I'm sure. And with pleasure.
Thank you so much, my friend. We learned a tremendous bit from you.
Thank you, Alex. Be well.
One more thing, don't close this episode yet. If you got value from this conversation, here's what I need from you. A 5-star rating, 1 comment, 20 seconds of your time. That's the deal. A 5-star rating means more founders find this content, and every time a founder raises, all boats are elevated. Every week, I pick one random comment and send that person a complimentary copy of Investment Climate, the book. 50 sales playbooks from founders who actually raise money during the fundraising winter. Real strategies, real closes, real numbers, not theory. So if you want a copy, comment below. And if you haven't followed the show yet, do that too. And if there's a guest you want us to bring on the show, just drop us a note or send us an email. We'll read each and every one. Until then, keep on raising.